All right, what's up, everybody? Welcome to the Tuesday 10X interview. Today we have Amber Moser coming to us live out of Arkansas. And I had the honor of meeting you. It was several months ago now. I spoke at the sales rally for their company, and man, she just defines what it means to be a modern mortgage advisor. She's winning locally. She uses technology, very high touch. She closed 10 loans last month, has scheduled 12 loans this coming month. And so I thought it'd be fun to bring her on and just kind of unpack what it means to be modern in a local market. How you doing, Amber?
I'm doing good. Thanks for having me.
Yeah, no, thanks for being a leader in the part of Arkansas you live in with Mortgage Coach, and then you're also helping elevate other loan officers at your company to modernize them and future-proof them. So we really appreciate it.
Sure.
So so describe your mortgage practice a little bit, how long you've been doing it, where do you get your
Yeah.
business, and let's hear how you're winning.
Yeah. So I got into mortgage in 2020. June of 2020 is when I started. And before that, I was in physical therapy, kind of a random switch, but I actually take a lot from my PT background into mortgage. PT is it's also very high touch. It's very educational. And I bought two homes before I ever got into mortgage. And so for me, one of the things that I found to be lacking was the education during the process. Just really not understanding how to make decisions as a consumer. What are points? Do I need to pay for them? Does it make sense for me to do it? Which loan program is the best for me? I think a lot of times clients aren't even given options. And then if they are, it's too overwhelming for them. And so one of the things that I just really noticed is I wanted to be that educational loan officer. I want to make sure that everybody understands that it's your money. You can do with it whatever you want, but I want to give you the tools and resources to be able to see that in numbers and tell the story with numbers. And I think I got introduced to Mortgage Coach. I think I was at Thrive. So it was like probably 3.5 years ago. I can't remember. I'm sure you could go back and look when I started, but I fell in love with the platform, especially because it gave me a way to give that to clients quickly and to give them options without overwhelming them. And it really was a big game changer for my business. It took off, especially whenever I started doing that. And I'm still known in my market now for being this very high touch, high tech. Let me show you these presentations. I actually had a client yesterday that he's been shopping probably four different lenders, and I'm the last one that he came to. I sent him a mortgage coach presentation. He's like, this is so different. I love this so much. And so that has really defined my bigger career. Like, this is me doing it differently in the industry, and it's worked out really, really well.
Well, congratulations. I mean, everybody think back to June of 2020. I mean, that was the heart of COVID. Now rates were on their way down. Was that what attracted you into the business? You had friends that were like doing a lot of refis, and it was just like, oh, I can make more
I
money doing
actually
this.
knew very little about the mortgage business at all. Again, just having bought two homes myself was about the extent of it. But I have a mom that's in title.
Uh,
My ex-mother-in-law was in real estate, and I love numbers and I love puzzles. And so when I knew I was exiting PT, I was like, okay, what makes sense for me to do? I actually did like disc profiles and personality tests to try to match myself with like future career opportunities. And one that came up was a mortgage lender. And I sat down, I ran it by my mom, ran it by my ex-mother-in-law, and she was like, absolutely, this is a great fit. And they were spot on. Like, they even told me the parts that I would love about the industry, the parts that I wouldn't. And they've been totally accurate. I wish I would have found it like 10 years ago, though.
right on. Well, congratulations. You found it. You're here. You're creating impact. I mean, doing over 100 loans a year, with the numbers you're doing is a big deal. So you're killing it. Um, when you first became a mortgage coach, did it take you a while to learn it? Was it like, right away, oh my God, this is better and easier? What was your transition from fee worksheet loan officer to being more strategic and being a mortgage coach?
I think curiosity, I wanted desperately to understand on my side so that I could communicate it well. I never identify myself as a salesperson. I know technically you are, but like it's just not something that sits well with me. And so I really wanted to know because I wanted to know what I was talking about. And I think that's actually where I started probably coming across your content. I found some other people online really educating me and advising and breaking down these things into detail And I was like, okay, this is what I want to do. I also started watching a lot of TikTok content with, mortgage, and that became another part of my business that was really integral. And, it's always better when you can teach somebody something. You really start to internalize that more. So as a new loan officer, there's over 900 pages of guidelines that we have between the four loan types. That's an insane amount of stuff to know. And one of the first things that somebody told me in this is you don't have to know everything, you just have to know where to find everything. And I love that phrase so much. And so I've really taken that to heart. But I just dove deep really fast because I wanted to know and I wanted to be able to educate and advise people as they're making this purchase. And so that was really like the defining factor there.
Well, this is a great interview, and I think not only people who have been in the business for a long time are going to get value, but I think this will be very inspiring for new loan officers, the next generation. By the way, you mentioned TikTok. Are you getting business from social media? Kind of describe one, your
Yeah.
pillars, like where does your business come from, and then two, describe social media and your philosophy on it and how you use it.
So we're actually like a really competitive market here in Northwest Arkansas. We're home of Walmart, JB Hunt, really big like Fortune 500, 100 companies. So we get a lot of people that are moving to this area, which breeds a whole lot of competition. If you're in a market like that, a lot of my business, because I came in 2020, every loan officer that had been in the business was doing refis, right? Like they were slammed with refis. That gave me an opportunity to go, okay, how do I get in front of realtors? How do I get myself to be, I don't want to sit and take you to coffee if I'm being totally honest. I don't want to have lunch every, 2 weeks to maintain this relationship. What I want you to know is that I know what I'm talking about in mortgage. And again, I need to know what I'm talking about in mortgage. And so 2020 was like, okay, we're going to get in front of realtors, and that worked a lot. And then we're going to start making content. And so that's actually the basis of my entire referral sphere. And it's not even that I get clients directly from social media yet. That's growing this year. I've gotten more this year than I ever have before. But what I get is I get realtors reaching out going, hey, I saw your video. I've never thought about that. Or I didn't know that you could do a VA loan and hold your old VA loan. They didn't know about bonus entitlement. Or, hey, I never considered the fact that instead of paying cash, maybe we should encourage them to look at a mortgage and keep their funds in an investment account. All of these things. And I wanted ways to show them this with numbers. And so I took to TikTok and actually used Mortgage Coach as a part of that. And I'll make a TCA and it'll be on a green screen behind me. And then I'll make a video to explain this to them. And so I'm getting a ton of realtors reaching out going, hey, I love your content. I'd love to sit down and have coffee. Like they're reaching out to me instead of me having to go put myself in front of them.
Love it. So social media has definitely been valuable to you. Not yeah, it's not that you've got a lot of borrower leads out of it, but you've got a lot of realtor leads and credibility. It's giving you
Yes.
some value with real estate agents. What channels do you primarily, you've already said TikTok. Are you also pretty active on Instagram, Facebook, any other channels, or is it just TikTok?
TikTok is the primary one. I just love the recording feature in there. It's a lot easier to use. And so I'll take my TikTok video, and apparently this is not good form, but I'll put it to Facebook as well, and I'll put it on Instagram as well. I don't like the Instagram platform for whatever reason. It just doesn't work for me. But TikTok I found to be probably the best way to get that stuff out there.
Got it. Yeah. Well, I know a lot of realtors are on Instagram, but it sounds like you're really connecting with those on TikTok. And I want to remind folks, if you have a question for Amber or something you want me to talk about, put that in chat. Let's make this mastermind style. So we're almost through the first quarter. I always think of these conversations as four quarters in a game, and I think we've got to know you pretty well. Um, if you had to break up your current business, like the 10 loans this month, the 12 loans next month, what percentage of them came from realtors? What percentage of them came from some other source? What are your primary sources?
Yeah, so 95% realtor referral. It's very high. Occasionally, now that I've been in about 5 years, I'm starting to get some repeat business from customers. There's a few, like I said, from social media, but I'd say somewhere between 90-95% is realtor referral.
Okay, great. And then when you describe, like in the second quarter, I wanted to get into specific stories, specific strategies, specific scripting. But before we do that, like high touch, high tech, local, like describe that to me. What does it mean to be high touch and high tech for you?
It just really means, like I said, to kind of the beginning to do this differently. I want to be the person that's advising throughout the entire process. And so there are days where it feels like I maybe do a few too many touch points as far as like the technology and making presentations, but I've really honed it to getting a pre-approval presentation out to everybody. I want everybody to have something in front of them where they can make a decision on strategy. Like that's step one. I want you to decide what loan program works best for you. So if you come in, obviously you're putting 40% down, you've got an 820 credit score, we know you're going conventional. I'm probably not sending you an FHA purchase, right? Unless you've asked for it, which I had that happen once. But I'm gonna send them a strategy presentation, and it's probably gonna look like either loan options. So if we're looking FHA versus conventional, or I'm gonna send them rate options if I know for sure we're locking down conventional. Maybe they're considering different down payments. My intake call always asks them, what's the goals for this purchase? What are you considering as far as your down payment? Are you open to a lesser or, higher down payment? I want to find out what they want from this or what questions they have, and then I want to be able to put numbers to it. So that's like the first step. And then I always tell my people after we've done pre-approvals, we do another strategy call. I want to see which loan type they like. Do they like the idea of a buy down or not? And then I tell them, hey, you're about to go shopping this weekend. Before we get there, make sure and send me your top 3 homes. Let me pull new property taxes for you and let me put those into a presentation because in our market, we're seeing like 40-50% increase in property taxes with the way our home values have come up. And Zillow, your MLS, it's not showing them accurate numbers. And when we're talking like a $150 to $300 bump in taxes, that might make a difference on whether somebody wants to buy that home or not. And so I really tell them, I'm like, send me those things. I don't mind to run another presentation. It's really easy to create in, Mortgage Coach. And so I'll just put all 3 in there and send it back to them so they have those numbers to work with while they're actually out shopping.
Love that. By the way, everybody, I want you to write down home ownership strategy. And so just hearing her talk, and I have when I spoke and did my keynote at her sales rally, she came up on stage and she shared one of her strategies. And sometimes it is like a pure total cost analysis. Sometimes it's interest rate strategies. Sometimes it's down payment strategies. But think of, it's a home ownership strategy to help someone, one, achieve home ownership, and then two, achieve home ownership in a way that they also receive financial freedom. Like at the end of the day, that's what people want. So before we get into specific strategies, we had Michael ask the question here with your TikTok post. How often do you post and what times have you found to be most successful?
So I don't actually abide by like, oh, this is the ideal time for TikTok or Instagram. I've never really done that. Instead, I found it was just easiest to kind of establish when I would, if I had a learning experience on a loan, I make a video about it. And if I have, if I want to talk really specific, I'll ask the client if they're okay with me sharing like specific details of their stuff. I never really share identity, but I share a lot of times like what I'm learning from doing intake calls or when I throw a presentation to a client and they have questions about it. I'm like, oh, I bet there's more people that have questions about it. So I'm going to go ahead and make like a PSA for this. And so a lot of my TikTok content is very relevant to the strategy calls that we have. And then the other one I make is totally also contrary to what everybody's going to say to do, but I do a mortgage market update on Mondays. That's actually been really well received with the realtors that I work with. It's good for them to know what's the national average for a conventional right now so that when they're out showing homes, they can speak on that knowledgeably and they just honestly don't look that stuff up. So that's been a good one as well. I try to get, well, in previous times, I've tried to get at least one every Monday through Friday. I haven't always hit it, but that's my goal to always get to. At minimum, I'd like to get 3 videos a week. And I found that that's been consistent enough to produce the growth that I want.
All right, guys. So I just shared a link in chat to her Instagram, and think of it, she's making that native in TikTok. TikTok, that's her pillar social, and then she's sharing that in other places. Um, in terms of her strategy, it's like she's built it around her job. Like as I'm learning, as I'm curious, as I found a story, which by the way, that's my story too with Mortgage Coach. Aside from every Tuesday, 9 o'clock, I'm creating this content, but I've always found that, like inviting her to do this call. I spoke at a sales rally. We met. She was like the top mortgage coach user. I'm like, hey, come to my show. So the more you can design the content you create around your job, so that it's accretive to your job, you've got a habit around it. I definitely love that. I'm not, and by the way, she just shared her TikTok. I recommend you guys go to town on this. Uh, Deborah Bird, maybe we'll talk this Friday and talk about the balance between, okay, create it around your job, but then time the post. To me, the most important thing is it's sustainable. Like you're going to do it consistently and it's quality. Like it's your authentic voice in an authentic way, the better. You agree with that?
Totally. I think that one, it's not going to be sustainable if you can't do it in a way that's true to you. So while I don't think that there's really anything new in this industry, I think, everybody's been writing loans in the same manner with just new technology since the 80s. Like loans haven't really changed that much as far as like getting approved. The way that we do it and the way that we're authentic with it is really what matters. Like Deborah or Denise, I worked at Thrive whenever she was there. She's been a big inspiration in how I've grown my stuff. But I've kind of always viewed this as a buffet mentality. You're going to run into people who they've got their way of doing things, and you might come across this and go, I really like what they're doing there, and that feels true to me. So I'm going to take this and I'm going to leave the rest. Not that it's bad, it's just not for me. And so I think that that's a really important piece that I've taken on as well. Is I'm not putting myself pressured to be doing exactly what everybody else is doing, but it's okay to also learn from what everybody else is doing.
Roger that. I'm pretty sure Deborah would be very proud of you and happy to hear that her and Denise Donahue, the mortgage nerd, have been an inspiration to you. So that's awesome. So one more question, and then we're just going to start telling stories, strategies, get some scripts. Um, with Rocket now buying Mr. Cooper, uh, you're seeing big platforms buy each other. You're seeing AI come into the market. How concerned are you about future-proofing your career or, Rocket and all these things? How much do you think about that and any thoughts or concerns that you have? I'd love to know.
Yeah. I'll be honest, the big companies don't make me nervous as much as my local banks. We have some really aggressive like local banks here that we compete with. The big companies don't necessarily have the ability that I've seen. I might be wrong, but they don't have the ability to be the high touch, high tech like we are. It's so churn and burn through that loan manufacturing process that you might talk to seven different people. And you're going to get passed around from this processor to that or whatever it looks like for them. I want to be the go-to for you from start to finish. I have assistants. I have a processor who's dedicated to me. They absolutely are all hands on deck in my files, but I make sure at the very start that people know that I am here to answer any questions that they have. There is no question that is off base, and transparency has been really big for me. I don't find that you see that as much with the bigger companies, which is why I love it. Doesn't scare me to put Rocket's fees and their rates in a TCA compared with me because I can show them that it's actually going to save them money to go with me. And I actually love having that tool to be able to show them, hey, here's how it actually looks whenever you break down the short term and long term cost of this. And so we talk about that a lot. And I just have yet to see a big company like Rocket or Better, whoever doing things like that. And I've received such great feedback that that's what my clients are looking for, that it makes me feel confident in my ability to move forward kind of the same way.
So I don't want to put words in your mouth, but what I heard you say is I'm not as concerned about the big national players as I am the people in my own local market that are doing high touch, high tech.
Yep.
And yeah, and by the way, guys, we talk about that all the time. Like if you want to win going forward in your local, you need to win locally and you need to win your database. And the one thing I want to put, like her database is TikTok.
Yeah.
Her database is her email list. And we need to start really thinking of your database. It's not just a CRM, it's your social media presence. She's built a brand for herself. She's delivering an incredible high touch, high tech experience, which we're all going to get to kind of walk through here now. But she's rocket proof. She's AI proof because she's doing these things. And I would just push everybody watching this call and this interview to audit yourself, as a modern mortgage advisor, on a scale of 1 to 5, what's your brand? On a scale of 1 to 5, modern marketing, check. She's level 5, modern marketing. Selling, modern selling. She's an advisor. She's using social media, like you heard her describe it. She probably, I bet, not only are you getting realtors that are asking you questions, it's like when you do talk to a realtor, you're like referencing your social media, you're following up with your social media. You're like, it's all this organic experience, right?
It's getting to be more that way. I think there's a little bit of a confidence thing at first where I didn't want to like throw out my own video, but now it's getting to the point where I'm like, hey, actually, I made a video about that. If you want to share that with that client, I had a realtor last week who was trying to send me a deal because a client was trying to back out of it. They thought the interest rate was too high. I was like, well, I can shop it for them, and I did, and we're coming in, a quarter of a point less on rate. And I send them the presentation. She was like, this is great. Let us think about it for the evening. Realtor texts me the next day and says, well, she's just concerned about paying $1 million for a mortgage over the next 30 years. And I was like, okay. I said, I've got something for that. Hang on just a second. I took her rent and I plugged it in a rent versus own TCA, and I showed her that she'd pay a million and or it was 1.1 million in rent over the next 30 years, or she'd have a $2 million asset assuming a 4% appreciation. And I was like, are we sure that that's the best call? Like, feel free to share this with her. I made her a little personalized video to go with it because I wasn't contacting her directly. And just giving my realtors those talking points, I think has allowed them to come back to me time and time again and say, hey, I've got this, little bit of a problem here. Can you help me have this conversation with this client?
All right. Well, I am loving this, and I see some hearts coming up. I know other people are loving this call. So let's get into some stories and strategies. Show us how you're helping people make. I think you call it strategy decisions. What's that look like?
Yeah. You want me to go ahead and share one?
Yeah, yeah. Well, before you share it, because I always think that, and you said it earlier, like the actual total cost analysis of Mortgage Coach is a way that you're telling stories with data.
Yep.
And so before you, and I do want you to pull up the screen, like if
Yep.
if you're a customer, like when you start telling a story, but tell us what the situation was, what the problem they were trying to solve, and then tell us the data story.
So I have a client that came to me. They were, I think it was about 2 or 3 months ago, a young couple. He had done a fantastic job of paying off all of his student loans, saving a ton of money. He's a teacher. I genuinely don't know how he did this. I think he got some money from family also back when and just did a great job of sticking it in an investment account. But he had yet to buy a house. And he told me, well, we have enough money to do 20% down. And I said, okay, great. Where's your money right now? Well, it's an investment account. I said, okay, is 20% down the only thing that you're considering? And he said, well, what do you mean? I was like, do you want to see some options for a lower down payment, leveraging a little bit of mortgage insurance? But I want to show you what it would look like for you to maybe keep some of that money in your investment account and let's go lower down payment. Because if you tie your money up in a house, it's much harder to get that money out if you need it. And in this economy, everybody would rather have a little bit of buffer than tying it all up in a property. And so he said, yes, let me see the numbers on it. And so I created a TCA for him, showing him it started out as I think I did a 3, 5, 10, and 20% down option for conventional. And then we talked a little bit about FHA because the rates were better and he was in one of those weird credit scores that it was like we could go either way. And so we wound up having a presentation with 3% down conventional versus 12% down conventional and a 3.5% FHA with a 12% down FHA. And that was where we started on strategizing for him to show him, which option might be the best.
So
And I
let's
could
so show us that data story, and then if you could, at some point, share a link in chat just so everyone who's following, it's almost like a virtual site visit. So everybody click on that link, and that is going to be the borrower experience. And then on her screen is the loan officer, mortgage advisor experience.
And this is part of what I do. So when I send out an email, I have an email template where this mortgage coach link lives. There is a strategy call Calendly link below it, and they'll set up a time with me and we'll pop on a phone call or a Zoom like we're doing here. And I love the highlight feature to be able to walk them through what we're doing. And so this was for my client. Like I said, we started with 5 to 20% down, but we kind of honed in on these numbers once he found a house. And so we knew the purchase price was going to be 370. And so I showed him that. I was like, here's our purchase price. We've got some loan amounts here based on your down payment. And keep in mind, FHA has upfront in mind. I always walk them through that. We talked about interest rate options. We kept the interest rate the same because of the down payment differences. And usually I'll throw in a couple of different interest rates, but I didn't in this case. And I always walk them through my first move is to open up more info and we're going to look at the payment breakdown. I talked to them about how I've pulled property taxes for the home that they're looking at. I've got my best guess on homeowners insurance. And let's take a look at mortgage insurance. So your interest rate on FHA is better, but your mortgage insurance is higher, but it still results in a lower payment for you. Does this matter to you? That's what I'll always throw back to them. Does this make you think one way or the other? And they're like, well, right now we actually care most about having the lower payment. So they ultimately went with FHA in this scenario. For this specific client, though, I wanted them to also take a look at their savings over the next 24 months. And then part of the bigger conversation that we were having, and I highly advise you guys start using this feature, we talked about that reinvestment strategy. So what if he does the minimum down payment on FHA? And he keeps the remainder of his money in his investment account. We're going to assume an 8% growth, which is very conservative. And we're going to assume that it stays there for 5 years. So, what does that look like for him? And so, we knew we were honing in on this key point, and so that's why I only set it up on that one. But I basically showed him what his net worth would look like over the next few years if he kept his money in this account and actually allowed his property to appreciate and his money to appreciate.
So, by the way, I hope everybody clicked on the link. For some of you, that was probably a wow. Like that was the first time you've seen that.
Yeah.
Most of you are mortgage coaches, and you're very familiar with that. But I mean, wow. Like you're showing. Go back to the net worth real quick.
Oh, yeah.
What'd you guys think of that, by the way? Give us a little reaction down below. If you have questions, feel free to post those. But yeah, we're seeing a lot of hearts, a lot of value. And again, guys, this is her advice makes a difference. Like she is truly, and it's not just transactional advice. Like she is giving advice that makes a difference. And every person on this call, you can do this. And that's another thing. Your job as a mortgage advisor will be a lot more fun. You'll be giving more value. She's having a whole different conversation with consumers that like, hey, here's your rate, here's your payment, here's your cash to close. And again, competing on a rate is a whole different thing. Cody King, very meaningful, right, Cody? By the way, guys, that's Jeremy Forcier's son. What's up, Cody? So I think you can stop sharing this one. I do. I had mentioned to you in the prep call, but guys, tomorrow, a lot of you on this call will be getting the Mortgage Coach AI feature. And by the 15th of the month, we'll have this rolled out to everyone. So just you'll notice in the bottom right-hand corner, by the way, guys, I'm going to hit share. And if you click on that link, you'll get the Mortgage Coach with an AI strategy. So one still has the live feature, just like it always has. You can click around, but now you can interact with it and go, what if I'm going to live in the home for 5 years? What is the best option? You could either go voice to text, or you could type that in. You know, what is the lowest cash to close option? Whatever that consumer is thinking or wondering, what would be my equity in 27 months on option two? If there was MI involved, might be a question of when can I have my MI go away? You name it, whatever question the consumer has, they can interact with AI. Oh, I didn't, when can my MI be removed? And I need to put a little edit. And now it might have a better idea how to, boom. By the way, Amber, what do you think of that new feature? You like it?
That's really cool because a lot of what I'm doing is video to go with my presentations, and I'm trying to like preemptively guess the questions that they're going to ask. And so that's really neat to be able to kind of send it more and let them be a little more autonomous with it.
Yeah, and guys, you will be getting a transcript from the consumer. Uh, so as the consumer has this conversation, you will get a transcript of the conversation they had. Also, I'm going to ask you for a script in a minute, but before I do that, I'm going to play a script from Jeremy. He's one of the alpha testers of this, guys. So make a note. This is a great script to how to describe the mortgage coach with AI to the consumer.
So, Dave, it was awesome meeting with you. Here's what I'm going to do is I'm going to put together a total cost analysis, which is going to be a video presentation of some of the things that we talked about in strategies, et cetera. There's going to be a video of me in the corner walking you through it, and you might have questions when you're watching it. Here's what's great is that you can interact with it and you can ask questions in a chat screen within it, and it will answer your questions. So you can ask things like, hey, what's the best program on here for me if I'm going to live in the house for 10 years? You could ask it like, what's the lowest cost option? You could ask it, if I'm going to refinance in 12 months, like which option would be most cost effective to me? So you can ask it any of these questions that you want and get answers. And then I would love to go over and review that with you and make sure it's in alignment with what your long-term strategy is. So if you have any questions, type them in the chat. Feel free to forward it to me, of course, as well, but use it when things pop in your head to see what it says. And then that way you can ask me better questions to create the best clarity for yourself. That's how I would.
What do you think of that script?
That's amazing. I think that would free up a lot of time to have other conversations that would be really meaningful as well.
What is your scripting now when you sounds like you email it to folks. It sounds like sometimes you're on Zoom,
Mhm.
but how do you position it? And what do you call it? Like he calls it a total cost analysis. Do you have like a unique way in which you describe it to consumers?
I just tell everybody it's a presentation, a purchase options presentation usually. I'll be like, hey, Jim and Susie, it's Amber with Gershman Mortgage. I wanted to walk through this really quick. Typically, it's like a 2-minute presentation. Here's the 4 options that I've put together for you. Just know that this is very tailorable. Like I can customize this if you're thinking something different. So this is just a starting point because almost always they're like not giving you the information that you want. And I'll say, hey, Jim and Susie, here's FHA, here's conventional. And then I wanted to show you this buy down option too. And then I don't know if you've considered, but what if we offer over asking on this so that you can get the seller to give you a credit? Here's what that would do for you. And so I'll show them, I'll make like a 2 to 3 minute video with it. And I always end it with, there's a link below this video because the video goes in the email. Schedule a strategy call with me so we can go over this together live on the phone. And whenever you get ready, send me some homes that you might be interested in, and we'll tailor this presentation a little bit more as well.
I like that. I like that. One thing I would push you to consider is calling them strategies.
Okay.
I did an interview last week with Jason Washburn,
Mhm.
who it was him and Jeremy, and a lot of his total cost analysis. I'm looking to pull one up here really quick,
Mhm.
but he was positioning them as strategies, and I do
Mhm.
think there is some value. Let me see if I can. I just looked at one. Yeah, well, I'll get one up and I'll share it for everyone. By the way, last week's call was bonkers. I highly recommend anybody to ever watch it. Jeremy is closing 27 loans. Well, it was last week. This month, the other guy was closing 22, and the title of the call was "What's Working?" Like, what are you doing that's working? And then Jeremy was like the first half, well, I'm doing this, I'm doing this, I'm doing this. And then Jason came in the second half and he's like, well, I'm doing this, I'm doing this. One of his ideas, tell me what you think of this idea. I think I'll be able to share it. So let's go. I think it was this one. He is going to buyers, or excuse me, sellers of homes, and he's looking for homes that have been on the market for a while. And then he's coming up with some ideas to buy down the rate and provide incentives to sell it. And then he's approaching the realtor with, hey, I've got some ideas to help you sell your home. And he said, one, it's getting him a lot of realtor meetings, and two, it's adding some value to agents. What are your thoughts on that?
I love that. I've worked with a couple of builders in our market that wanted to offer some incentives, and I've created them a blanket presentation. Their goal was to either offer a $7,500 credit towards closing costs, a rate buy down, or they were going to do a 10K price reduction. It was kind of different there. But I set up all three options in a TCA for them that's a strategy template for their clients. So whenever a client comes to me and they're like, well, we're not sure which option to choose, let me put the numbers to it for you so that they can decide. But that's really cool. I had never thought about listing or reaching out to listing agents with that.
Yeah, listen to the call, guys. We put a link down below to last week's call. Linda Buchanan just said, "I love strategies versus options." And when we think of Mortgage Coach Next Generation, I mean, part of it's AI, part of it is using data to actually automate the creation of the total cost analysis. And it's also about going beyond the total cost analysis. So we think of everything that we do as home ownership strategies. Like, in total cost analysis is a home ownership strategy. Down payment options is a home ownership strategy. So tell us another story. We're moving into the fourth quarter. We got another 12 minutes left in this. No, we got 17 minutes left. So what's another one?
Another one that I've been doing a lot recently has been cash versus mortgage. And that has been, it still includes the reinvestment strategy, but that's been a big one too. I'm seeing a lot of people that are curious about pulling out funds from their accounts to go ahead and pay cash for an investment property or to buy their kids. We're a college town here, and I'm seeing a lot of hey, we're just going to go pay cash for our kid to live in this home for the next 4 years. And that's where I'll start to introduce like a kitty condo strategy or just showing them what it would look like to do it as an investment purchase instead. And again, free up those funds. That's been a big one for me. And I have a presentation for that as well. Or the other one is like a buy now versus refi later or wait on rate because we're still seeing rates kind of hover higher. Having lots of conversations of, hey, Amber, what do you think is going to happen in the market? Do you think that rates are going to drop? And of course, we're always telling them, I don't have a crystal ball for that. And this was actually something that I shared with a brokerage. I went in front of probably 40, 50 of their realtors, and we talked about outlook for the 2025 year. This was earlier in the year. And I made this presentation to show them how to have the conversation with the client about should they go ahead and pull the trigger on buying or should they wait on interest rates to drop. And I pulled some data from 2019, 2021 to show them what that looked like. And so it looked like we had a conversation around
Yeah, let's
this.
show them if you don't mind sharing a link in chat. And
Yeah.
remember, everybody, we're gonna have a master link down below, brought to you by Housing Link and Scott Nicholson. But all the links that are mentioned in this call, we've talked about past interviews that you should watch. We've shared a couple total cost analysis. We've shared Amber's TikTok and Instagram. There'll be one link. You watch this on YouTube, and all of this content will be there to help you. And I love how simple this is. Buy in 2019, 21. So walk us
Yep.
through.
So assume if you bought in 2019 at a 310 purchase interest rate, or I was hovering around the 4.5%. We did a 30-year fix. Your payment would be 2132 per month. Cash to close looking about 18,288. Versus if you took that same home and we did it as a refi strategy. So I can break this down a little bit more, but I said, what if you had the same home, so 310, but your loan amount is now down to 295, you've paid it down enough. So in 2021, you were able to refi to a 3.25% interest rate. Your payment then drops to $1,871 a month. But if you didn't get in 2019 and you thought 4.5 is too high, I'm actually going to wait for rates to come down a little bit more, and you waited until 2021, we saw record appreciation on homes. And so that that property is now worth probably 400. So you're entering the market at a higher price point. If let's say that you still put the same percent down and you buy it at 3.25, well, your payment is now 2313 a month versus you could have bought back in 2019 and refinanced into an 1871. So that's a difference of $442 because you chose to wait. And of course, we have no idea what's going to happen, but I mean, historically, data says that that home values are going to appreciate. I think I saw something the other day that said since 1942, if you bought a home, there is only 1 year in that entire time that if you bought a home and held it for 10 years that you would have lost money on it. And that was 2006. And that helps us have the conversation that home ownership is a safe bet for you. Property values are almost always going to appreciate. And if they don't, guess what? Sit in the house a little bit longer. And then if you do buy the house, say at that slightly higher interest rate, as long as you can afford the payment, refi opportunities are also likely to come. And you're going to get that better payment later on. You have to be able to afford it now. But I've just never seen it pay off where you wait on rate and you actually get a lower payment. And I've run this number for a few people. I have a couple of clients that have been actually sitting on the fence for 3 years. And I have shown them this presentation no less than like 4 different ways, and they still just don't think that it's the time to buy. And so they missed out on 3% rates. They missed out on home values that were 40% less. And some people just can't be convinced, but for those who need some convincing, this has been a really big game changer for me.
Love it. And we've shared that down below. I want to share another little highlight of what's coming soon. If you could stop sharing your screen.
Yeah.
I do want to come back to you in just 1 or 2 minutes. I would love for you to show that cash versus mortgage analysis, because I know when we shared the stage together, that was what I had in my presentation. And I think it's a really powerful presentation. So what I'm going to play right now is a clip from last week. We did a webinar where the week before, or 2 weeks, a couple of weeks before that, we showed our AI that's hitting the market tomorrow. And then in August, early August, we're rolling out a new app, the Mortgage Coach Next Gen app, and it's going to make creating a mortgage coach even easier. We're going to be using data to get it started. And let's watch our Chief Product Officer, Rich Labarca. This is less than a minute. And Spencer, our head coach, demo this new feature. Tell me what you think as soon as you see this.
What I'm going to do here today, I'm going to go for the world record with our new Mortgage Coach Next Gen presentation. I'm going to go to try to create the fastest Mortgage Coach presentation ever created using our app. All right, guys, let's see how quickly we can do it. All right, start the timer and let's get ready to go. All right. Importing a contact. And we're going to do some different purchase prices here to show someone who might be shopping and wanted to put 20% down. I'll throw in some closing costs. We'll go do an estimate of our monthly costs here. And then we're going to go add a second purchase price option. I'll redo the down payment. Everything copied over. And look at that. Done. We just did a TCA in 44 seconds for my buddy Justin here, who wanted to go look at a couple different purchase price options. We have this quick presentation showing him the difference in monthly savings and cash to close. Easy breezy, beautiful cover girl, right?
What'd you think of that?
That's amazing. And I know this is simple, but I love that it pulls in iCloud contacts. I find that there's a lot of tech now that doesn't do that seamlessly, and so that's pretty great.
Yeah, I'm glad you noticed that. And Mike, thanks for the shout out. By the way, that's not out yet. I just showed that was roadmap. Tomorrow, I don't know what percentage of you will have the AI. All of you will have the Mortgage Coach AI by the 15th of this month. We're rolling it out to enterprise clients first. And Amber works for a company that has us built into their tech stack. I want to remind loan officers that do not have us built into their tech stack. Tell your management team that it's never been faster, it's never been easier, it's never been more valuable to be a mortgage coach. And still, if you're an individual loan officer, you can sign up online. Just go to our website, get started. In the link down below, we'll have both a link to get a demo of this, and we'll also have a link to sign up. So we'll have a couple links. And yeah, thank you for your comment on the video and interface. So Amber, let's do a cash versus mortgage strategy.
All right. So I had a client also that came to me. She had enough cash to put down on an investment property up here, and we had the same conversation that I usually have. Hey, do you want to do all of your cash tied up in this property? Do you know that you have to wait 12 months to do cash out refi? And she didn't. And so I wanted to show her what it looked like instead to do a 20% down purchase on an investment. And we essentially looked at, actually, this was an investment, it was primary res. We looked at both options. I simply showed her what that would look like. And the biggest thing that we walked away from this, I was challenged on a TikTok video made actually about the reinvestment strategy. And they were like, well, you're not considering the monthly savings and how you won't have a mortgage payment and how you could reinvest that money. I was like, that's a great point. And so now I started adding that in. And so what you'll see is it's a 500K purchase, either zero loan amount or a $400,000 loan amount. And then the monthly payment being $26-27 a month, or them taking $2,600 and reinvesting it into their investment portfolio. And so we can always look at obviously like what the savings would be over the short term, but I wanted to talk to them about their net worth. And when we get into the details of it, home value will be the same regardless, right? Assuming a 4% appreciation here. Their loan balance, they'll obviously still have a loan balance in 5 years. They will have spent $157,000 on principal and interest, but they also get tax benefit here versus the other situation where they don't. And then the other thing that I really wanted to show them is their investment balance. So they have all of their cash in option one tied up in this property, or the majority of it, versus option two, where they still have almost $1 million in cash that's free to either diversify on investments or to, go buy other properties with whatever they wanted to do with it. And while the net worth is very, very close, this to me was the most meaningful part is they have their investment balance so much higher by using the mortgage versus just tying all their cash up in that.
I love that. I love that. I love that. I love that. By the way, I just found one of your TCAs that I used a while back. Let me share my screen again, and I want to know how often you do something like this.
Okay.
So this is actually one of Amber's TCAs where you showed 20% down, 15% down, 10% down, and you showed 4 options, and you showed the different, net worth. Is this a pretty common move that you make? What are your, how often do you do this?
So the first guy, the presentation that I showed you very first, this was actually one of our go-to presentations for him initially. I wanted him to see, because he could go all the way up to 20%, what that would look like. And this is how we started to hone in on the down payment numbers that we actually landed on. I have been doing this way more recently than I ever have in previous years. I don't think I ever used a reinvestment strategy until probably the end of last year. And with the way the economy is going, I think we're seeing a lot more people be hesitant or maybe considering keeping their money in accounts to have that additional buffer. The other thing I'm having a lot of conversations about, and specifically, I'm a certified divorce lending professional. I'm the only one in the state of Arkansas. I'm doing a lot of consults for women specifically who are going to have lump sums that they are going to use to buy a new home after their marital home sells. And I have had several conversations over the last few months showing them, hey, I'd like to show you what it looks like to keep this money in an account over here. Maybe let's do 10% down versus 20. This gives you an emergency fund. your monthly payment's only $200 difference. How many times could you pull $200 out of that emergency fund versus how difficult would it be to get that money back out of the home? And so that's a big conversation that I'm having a lot right now. People don't understand that $10,000 down on a house is about $50. Maybe it's not that big of a difference. And so you can pull $50 out of $10,000 how many times? And so I'm having that conversation a lot with them, more so nowadays, trying to help them understand that having that savings is probably way more important for them right now in this phase of life than tying it all up in the home and saving $50 a month.
Her advice makes a difference. So Kathy, thank you for calling out Spencer. I agree. He is a rock star. Carrie had asked, how did the tax benefits calculate? And anything you want to add to that?
So the TCA automatically calculates that, right?
Yeah, it does.
So it's
I didn't know if there
considering,
was. Yeah, we automatically calculate that. You just put in the numbers. I want to remind everybody, every Monday we do beginners training. So if you have never made a TCA, really Monday is for the first 20 mortgage coaches. And then every Wednesday and every Thursday, we got Coach Spencer. He is there to help you and answer any questions. It's group coaching, open office. Highly recommend it. If any of the things that Amber showed today, you're like, oh, how do you do that? Show up. Coach Spence will help you every Wednesday, every Thursday. So we're in the last 8 minutes of the call. I want to make sure anything that you plan to share could be another story or a data story, as you put it, could be something else. Anything else you want to make sure gets covered before we run out of time?
man, I would just say get really familiar with Mortgage Coach and start to leverage it with all of your clients. Be willing to, even if it sounds so simple, like interest rate options, like get very comfortable with showing them those options. If you know for sure that they're wanting to just go with a par rate and this down payment, make sure that you're presenting them with options because it's going to make you look way more knowledgeable. The other thing that I always like to tell my people, and this is just a high trust touch point at the very beginning, is the reason that I show you these data stories is because it's your money, it's not my money, and I want you to do with it whatever feels right to you. And that automatically sets me up to be in a position that they know that I am looking out for their best interest and whatever that looks like. So if they bring me a Rocket quote and they're like, hey, Amber, your rate was this, but Rocket says they can do this. I'm like, great, bring me a fee worksheet. That's helping me have these conversations up front to be able to secure the trust on the front side. So I think I really couldn't do that honestly without Mortgage Coach. And that's been such an integral tool. So can I answer Linda's question real quick?
Yeah, go for it.
I can grab the link for you. It's a CDLP designation. It's through the Divorce Lending Association. It's been really helpful. So if you deal much with divorces, I highly recommend them as well.
Yeah, so we'll put a link to that down below. If you're watching this, we'll have a link. What percentage of your borrowers are first-time home buyers? Like, what's the mix between move up and first timers?
I'd say probably 40% first time buyers.
Okay. So more move up. I want to remind folks about First Home IQ. I was at the Modern Mortgage Summit last week, and my keynote was called Know Your Code. And I'm currently writing a book called Know Your Code, Live Your Code, Share Your Code, all about just being your best authentic self. I have found that the people that are most successful financially and doing it in a way that they're just happy, they're motivated, they're sustainable, they know their code. I mean, I can tell right now Amber knows her code and it probably grows all the time. But leaning into first-time home buyers and educating Gen Z has never been more important. So check out firsthomeIQ.com. Are you familiar with firsthomeIQ.com?
Yeah, I
Have
need to
you?
get back on the schedule to get signed up for it, but yes.
Yeah, we would love to have you more active in that community. We'll put a link. By the way, guys, there's lots of free content that you could just use to teach home buyer workshops, emails that you can send to your database. social media content that I guarantee Amber will probably like get inspired by it and then create her own version. But it's a nonprofit that could just help you create more first-time home buyer content. All right, did we get all the questions? Thank you, Amber, for sharing that. So in the last couple minutes, uh, I think I shared part of my code when I spoke at your keynote. My advice makes a difference. I had a few other little things, but when you think of your code, philosophies that you have, principles that you have, what do you think one or two of those are that have been most valuable to you to get to where you're at right now?
I think transparency has been a big one. I was actually asked about my personal brand last week, and I've never really defined it before, but education and transparency. Just again, I want to be able to give everybody the most information that they need without overwhelming them, to make the decisions that they need to make during the mortgage process. And I want to make sure that they feel empowered to do so. And that's really been the biggest thing for me, is just I want to make sure that I can serve each client in the way that's meaningful to them, which is why I love tailoring the strategies towards each individual client. And that's really hard to do without having the tools and tech that you have. And on a local level, that's something that really sets you apart, especially if you're doing it in a way that reaches a large number of people, like through social media or just high touch with your realtors as well.
Yeah. By the way, everybody, as you before you go, if there were a couple words or a phrase that, when you think of Amber and you think of her brand, I mean, I personally think her advice makes a difference. She tells data stories. She's modern, but if there's something that might be helpful, a word, a phrase that would help her as you've just listened to her, we still have a big audience that's listened to her. What comes to mind? Education. By the way, Kathy, the Mortgage Coach YouTube channel, like I'm doing interviews like this every single week. I can't tell you how many leaders and managers that if they're new, hey, you need to watch one or two of these every week. And so this is a great place. Also, I put my mobile club, Savage Insiders Club, 949 799 0837. Couple times a week, no more than 3 or 4 times a week, I am texting out what I think is the most important content for loan officers to have. So, Kathy, make sure you're part of that mobile club. Uh, any closing thoughts, Amber?
No, I'll just build on what you said. There's really so much free information out there. You guys have zero excuse not to go learn and grow and be the very best that you can be for your clients. Dedicate yourself to it. Find some time to set aside to train yourself so that you can train them well, and make sure you're always leveraging the tools and tech that are meaningful to you and your clients.
Yeah, and you said it early on. You don't need to know everything. You just need to know how to find it. And you can use AI. By the way, are you
Yes,
using AI? How often do you use AI?
all the time, literally every day. I
And
love
what
AI.
what's your platform?
Chat GPT.
What are some typical prompts that you're using?
Oh man, my favorite one that I've done this year, I literally have something every day. It helped me write a divorce mortgage checklist yesterday, which was really fun. But the other one that I've loved this year is I sat down with it. If you don't have the $20 paid subscription, I highly recommend it. It will talk to you and have a conversation with you. And so I was on my way back from Sales Summit actually, and I sat down and I said, okay, I need to identify my workflow and areas of inefficiency between the start of a client meeting me all the way to post closing. And so I said, ask me questions to figure out what you need to know to help me identify this. And we had a 20-minute back and forth conversation. And by the end of it, I had a bulleted list of all of the things that I needed to identify or work on or have more tools in tech to address. It was amazing.
Yeah, I did something similar over the weekend. I had a bunch of people after my keynote said, Dave, I want you to help me document my code. And so I created, with the help of AI, a know your code playbook. I just shared a link to it. It's like 1 or 2 pages. I'm actually going to help a bunch of loan officers uh, know their code. If you want to get invited into that group, just go to the Savage Insiders Mobile Club and just say, hey, I want to know my code, and we'll invite you to that. But Amber, this was awesome. You killed it. This is the first of many conversations. Good luck on hitting your 12 loans next month. I know you inspired a lot of people. I can see the hearts coming up here. If you're watching this on YouTube, give it a like. Make sure you subscribe to this channel. Like, I do interviews like this every single week. And then we're even creating more micro content. So get into the Savage Insiders Club, give it a like. This is a wrap. Take care, everybody. Thank you again.